It's 2026 and already a lot has happened, but a question I continually get is what should we expect or anticipate in 2026 going forward? Here are my thoughts on this edition of the Video Market Update. So inherently there's always really two choices. Are you a bull who's optimistic or a bear who's pessimistic? The bull or optimistic case for 2026 is looking for strong corporate earnings, accommodative monetary and fiscal policy, right? So enough stimulus from government and the Federal Reserve, but not too much. And you believe that we're still in the early days of the AI build out. If you're a bear and you're more pessimistic, you look and say, well, we're starting the year at high valuations. Potential returns are already priced in, and unemployment and inflation are going to drag down the economy and consumer sentiment. So when we look at what are the expectations for the year, one disclaimer is this is not guaranteed performance, and this is not predictions on my part. This is analysts and what they believe from third parties. So if you look at this chart, we can see that at the top we're at about 17% return in the S&P 500. That's this company's expected return on the S&P 500. If we go all the way down, and it doesn't show on this list, Bank of America is at about 3%. So somewhere between 3 and 17% is the expectation for returns on the S&P 500. The average is coming in at about 10%. If this were to come true, we would then have 4 consecutive years of double-digit growth. The last time we saw that was in the late 90s internet bubble. So a 10% growth would be fantastic, and it would be somewhat unprecedented, but we've seen it in the last 25, 30 years. International, there's an expectation that it may outperform the US market. Goldman Sachs believes that based on their earnings of international companies having greater potential than US companies. Again, no one has a crystal ball, but this is from what they can see and what they're anticipating moving forward. A big question is, well, what will happen in the bond market with fixed income? That's really dependent on what does the Federal Reserve do. We know there will be a new chairman of the Federal Reserve in the summertime. Will the new chair, will they make cuts based on feeling like it's a mandate, like this is what they're supposed to do? Will they be data dependent and say this is what the data says? If they choose to cut interest rates and they cut them too quickly, it could cause inflation. If they don't do anything, it could help stagnate the economy. So that's kind of an important point that we're going to look at. And when you look at global inflation, there are countries that are much lower, much higher than the US, but for most developed countries, we've performed better through the last 4 or 5 years of high inflation. And although we're not at the Fed's 2% target, we're pretty close. So when we think about returns for the year, we think about economic growth. Most analysts believe we'll be at about 2.5% GDP growth. Goldman Sachs thinks we'll be closer to 3%. So you can see there's more of a case right now for the bulls than there are for the bears. But again, that's what the whole year is going to be, is determining where we end up on that spectrum. And my job is to let you know what's happening along the way. So if you have any questions on this or anything you're seeing in the news, let me know. But if not, as always, I hope you make it a great week.